Alright guys, we've kicked off a fresh brand new month. With that being said, I've got a couple of top growth plays I want to put on your radar to ensure you guys are building out your portfolios right. As you guys know, now is the right time to be building, constructing your portfolios and getting ready for success. Now, I'm coming at you with plays where that price has been beaten down. They've also crushed earnings and they've got some great guidance going forward. And I'm telling you guys, when you get that combination, that's a recipe for success right there. Now, we are also covering all bases in this drop, from EV to clean energy to gaming, gambling to cannabis, the whole lot. So I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. And if you're new, do join the movement by hitting that subscribe button. All right, guys, without further ado, you know what time it is. Let's get ready for our first one. So our first one, that's MP Materials, ticker symbol MP. This is a producer of rare earths that are used in electric vehicle batteries as well as other technologies. Now, what you guys must know is this stock price recently got the smackdown from the markets after they announced their stock offering. Now, we know stock offerings have that short-term pain effect as we see that stock price come down temporarily, long-term gain as they use the capital to grow, scale, and fund their business. Now, I want to teach you guys how we properly navigate these stock offerings and use them to our advantage as investors, because we are going to see a lot of them as we go through the year. As a matter of fact, all the growth plays that we have in the portfolio, I expect them to do stock offerings at least every 6 months, some of them every 3 months. So it's important you guys are able to navigate them and use it to your advantage. Now, when they do the stock offering, they're going to announce the stock offering price. And I use this price as a floor. So I have an entry. I set my entry when they announce a stock offering slightly above that stock offering price. So in the case of MP, they announced a stock offering price of $35. So if you're able to catch an entry slightly above that, $35.50, $36, you have the green light to go on this one. Now, the second part to the strategy is you might get more market volatility, more market weakness. That stock might drop below the offer price. Therefore, we have to re-enter and dollar cost average down. So in this case, we're looking for entry below $34. Now, with these plays, guys, I always say we're looking for that unique selling point which sets them apart from the competition. And if you can't find that, it's time you stop your diligence and move to the next one. Now, with MP, they're one of the only US producers of rare earths at scale. Most of rare earth production is done by Chinese companies, and there are tensions between China and the US when it comes to this. And if any restrictions are put in place on exports from Chinese companies, a play like MP can step up to the table and fill that gap. So this is a good play with a lot of potential going forward and opportunity to make the most of that reduced share price. Now, I've got an end of year price target on this one of $50. So that's big upside on the current price. This one's got catalysts from many different angles. Not only are they going to benefit from the rise in EV, but also there's potential restrictions from Chinese companies, as well as any key wins and partnerships that they make. So this one is going to continue to climb. So make sure you keep this one on your radar the entire month. All right, guys, let's move to our next play. Next up, that's Sunrun, ticker symbol RUN. Now, this is a play I brought to your attention a couple of weeks back when they're in the mid 50s. So since then, they've gone up around 10%. So I don't want you guys to rule out those clean energy plays that are out there in the market just because they've seen a bit of red and they're down at the moment. Those present some of the best growth opportunities to add to the portfolio. You guys got to see past the noise in the market and focus on the value, the quality, and the growth potential in these plays. So this is a play that are experts in solar. Now check me out. I just want to show you guys the stock price on this one. We can see right now this play is in full consolidation mode. You guys know I've taught you the charts. And when you see that growth play that's in consolidation, guys, it means they're getting prepped for the climb. So once this market reaches a bit more stability, once we start seeing some more strength in the growth market, guys, you are going to see this one climb into the high 60s, into the 70s, onwards onto the 80s. This is a strong play fundamentally. So this is a key asset within your portfolio, help you guys diversify and get some exposure to the clean energy space. Now, stocks to buy April drop really would not be complete if we didn't include this one. That's Grow Generation, ticker symbol GRWG. Now, what you guys must know is there's not many plays out there in the market that are firing on all cylinders like this play and have the strong market fundamentals to support continued growth. Got to think about it like this. New York have recently come online. That's going to increase the opportunities for this play. We also know earnings was a crush and they've increased guidance going forward. And they're backed by management that are just resourceful, focused and driven, determined to hit success with this play. So this is one that we're going to continue to hit multiple wins on throughout the year as they make their climb. Now, Grow Generation, they're basically setting out to be the Home Depot in their industry, currently sitting at $50. You guys must know we have a potential triple digit play on our hands here. So if you're able to get in below $50, we have another double money play on our hands. So build your positions in this one. As I say, below $50, lay that foundation in this play. Have some patience. When the market turns, see some more stability, some strength, you are going to see this one climb. Our next one, that's Skills, ticker symbol SKLZ. Now this is what we call a disruptive play. They're carving out a niche in the mobile esports arena by adding that competitive element to their game. So they're favored by the developers, favored by the gamers, and that is reflected in them crushing earnings. We saw an increase of over 90%, and I expect a lot more as we move forward with this play. Now this is a play that you guys need to exercise some strength and look past the red right now. A lot of SPAC plays are getting hit left, right and center, but we have some quality plays like Skills that will climb. I want to bring your attention to a charge point. Now we know this play over the last couple of weeks has been getting the absolute beat down from the markets. A lot of you guys thought this play was dead and out, but you saw what this play's done over the last few days. You've seen that meteoric rise in that stock price. Now that kind of price movement is what a Skills is capable of doing. That's why it's important for you guys to make the most of these depressed prices, load up, grab your positions, and this will climb. Now you guys know I'm always going to help you cut through that market noise and identify the quality plays. With Skills, you got to think they're targeting that mobile gaming space, which is the fastest growing niche within gaming. It's around $70 billion right now. It's going to be worth around $150 billion in a couple of years' time, and Skills are going to benefit from the rise in the industry. This is because they have the platform, they have the engagement, and they've got the partnership pipeline. Got to remember, they have their NFL partnership, which is coming online soon. That's going to bring tons of NFL themed games to the platform, introduce a lot of NFL fans, and make them a lot of revenues in process. So again, this is a play you guys must keep on your radar throughout this month. Now I want to show you guys the charts on this one. It was only a couple of weeks ago we saw this one climb above $40. So again, this is a double up candidate you've got on your hands. You guys just need to show some investing strength with this one. Look past the market noise, trust your boy in this play, and grab them at a cheap price. Guys, entry on this one is below $20, so they're already well deep into my buy zone. Now, stocks to buy April would not be complete without touching on a crypto play. We're going to bring it back old school with this one. We've got Marathon Digital Holdings, ticker symbol MARA. You guys know we've been holding this play since $2, so we've seen that meteoric rise in that stock price, and there is much more to come if we can continue to see strength in the price of Bitcoin. Now the appeal of this play is they're looking to deploy 100,000 miners, which really does set them in a league of their own versus the competition. Q1 this year, their target was to deploy 15,000 miners, and in April, they're going to deploy another 5,000 miners. So you can see they're far off the mark of the 100,000 miners, but this just means there's a lot more potential in this play. Now you guys know the strategy and the formula of how we continue to crush these mining plays. We need to see some weakness in the price of Bitcoin. Take that as an opportunity to jump in on Mara at a lower price before the rise in Bitcoin. And now you guys know how we crush this play and our other crypto related plays. That is, we need to see some weakness in the price of Bitcoin before pulling the trigger on this one. But you guys know, I'll let you know, I'll give you the heads up of when we're jumping into this play to make the most of the opportunity of the lower price. So this is one you guys should keep on your radar for April. Not only that, for the rest of the year, because we're going to continue winning on this play. This is one that we just recycle time and time again. All right, guys, so those are the plays and you've got the strategies to go with. Rock with the channel, you know what time it is. Nice question comes from A. says, would you recommend for setting stop losses for high growth plays? Do you recommend to set it to break even once in 10% profit? Now this is a great question and it's very topical since we're just talking about high growth plays. Now with these stop limits, you guys know we place them to get exposure to the upside but limit our downside on these investments. Now with these growth plays, I tend to not set stop limits, and there's a reason why I do that. With these growth plays, you are going to get volatility, and throughout the course of a year, certain things are going to happen, such as stop offerings, such as short seller reports. They might miss guidance or estimates by a cent or two, and that's going to cause some volatility. But all of these things don't make that a bad play. That's still a fantastic play with great growth and a good future and a lot of returns to be made on that play. So what's going to start happening is a lot of your stop limits are going to be triggered. And if you're long term that play, it's going to cause a lot of confusion for you guys because you're going to want to re-enter that play. And if it's not in your portfolio, if you don't see it within your portfolio, it's going to be that out of sight, out of mind. Take a charge point, for example. We've seen charge point come down heavily over the last couple of days. Now, I'm using this one as an example to show you guys the power, the potential of these growth plays when they rebound. They rebound strong. And you guys have seen over the last 2 days, by just missing 2 days of being invested in charge point, you've missed out on solid returns in that play. So can you imagine your stop limit is triggered on the way down? You didn't reinvest into charge point. Now you're going to have to buy back at a higher price. And this is going to start happening to a lot of your growth plays. So the strategy is with these growth plays is you ensure you are invested into quality, and I hand them out to you on this channel. The second part to the strategy is you ensure you stay invested. Now, there's an option for you guys to set stop limits in 2 cases on the growth plays. So if, for example, if you got in at a price, you're not too sure about your entry, okay, then you can set your stop limit at break even on that growth play. So if they do announce a stock offering, or if they have misguidance by a cent or two and that stock price does come down, trigger your stop, it gives you the opportunity to buy back at a better price. But I'd be selective of how I use that strategy. Now, the second time to use your stop limit on your growth plays is when you start to see it show some unusual momentum upwards. You can set your stop limit. So if there's any downs volatility, if it recorrects, you can net that profit from that movement upwards. Think, for example, of a NEO when it crossed over $60. If you set your stop limit at 60, you would have cashed out, made some good returns as that stock price has come back down to the mid 30s. But as I say, with these growth plays, I ensure I'm invested into quality and I stay invested through the volatility. I make better returns that way. Alright guys, that wraps things up. Do hit the like button for me, and if you're new, join the journey by hitting that subscribe button. Now ahead of us, we've got a long weekend, but you guys know I'm coming at you with a ton more videos to ensure we're prepped and ready for next week in the stock market. So I'll catch you on the next one.